Roman, warm welcome to you here on stage. Last year we had Caroline also from BNY on stage, and it's always very inspiring to hear from Bank of New York Mellon around like your journey into the space of digital assets and what's going on there. So curious to hear like what has happened over the last year in BNY. What is your update on things?
Yeah, so great to be here. Thanks for having us. I mean, a lot has happened in the last year, that's for sure. But let's kind of step back on our digital assets journey. A couple years ago, we recognized it's a big deal. And we launched Digital Assets Unit. Digital Assets Unit was about understanding technology, understanding use cases, talking to clients, talking to partners like you, talking to the regulators, and really just getting smarter, getting educated, and experimenting. And on that platform, we launched Digital Assets Custody last year, as you know, the first GCFI doing that. What we recognized that after all the conversations, based on a client demand, and that's very important, based on a support from the whole ecosystem here in the US and globally, we decided to make it a business. So we announced the digital asset business, which Caroline actually leads, and she used to lead custody for us, which is what Bank of New York is known for.
Yes.
I mean, we are the custodian for 45 trillion of assets. That's double US GDP, right, for those accounting. So we take very important senior leader and we put them full time to lead our digital assets because we really believe in the potential of that. So yes, last year been hard in some ways, but on the other ways, it really supports the foundation of trust and supports ongoing innovation, which we are very proud of. We are 240 years old. Alexander Hamilton is a founder. I tell that at every opportunity. So with all this pedigree, with a track record of innovation, digital assets is the thing to innovate on now.
That's awesome. And then when now we look backward on what happened over the last year. So if you look into the future around your roadmap, what are the things that we look beyond custody and other things? Are there stuff on the roadmap that you'd like to share here?
So I think when we look at digital assets, I would say we look in three big groups. First of all, it's an asset class.
Yes.
So everything we do, custody, fund accounting, collateral management, any other activity we want to do for digital assets as well. It's an asset class. We do that for stocks. We do that for bonds. We do that for mutual funds. We do that for ETFs. We want to do that for digital assets. So that's number one. Number two is the technology itself. Technology itself offers a lot of potential. It can not only support the digital assets products, but also help us to modernize our whole infrastructure, our whole architecture, the way the company runs, the way the whole ecosystem runs. That's number two. And number three, use cases. Whenever you have a new technology, you have a new use cases. So launching new products, providing access to customers that could not potentially access now. So think about, private equity fund. If you're a significant investor, it's pretty easy to invest. Small investor, it's pretty hard. But take this private equity fund and tokenize that. Now we can provide access to people that could not access it before. We can allow more seamless transactions, trade, buy, sell, entering, different arrangements, something that really brings financial services and brings innovation to the forefront and to much greater part of the population.
And I know that building some of those capabilities and working with these things, that's like it's a lot of effort. So how do you decide on what you would build yourself, where you partner, where you potentially buy, and what are your like framework for doing so?
I think this whole buy versus build dilemma being, in my mind, going for a long time, it's also being simplified. There are many arguments for buy, there are many arguments for build. We really believe in a culture of partnership. It's really important for us to provide amazing client service to our clients. But how exactly product being constructed, that becomes less important. So we believe in partnerships, and partnerships is really the core principle of our operating model. We sometimes call it the culture of partnerships. If somebody is doing something amazing, why do we need to spend our time, our money to duplicate that? And even if we do, we're going to do what they do today while they're advancing forward. So when we launched the digital asset custody, it was incredibly important for us to have partnerships. I mean, with you,
Thank you.
with other companies like Fireblocks. What we felt, for example, Chainalysis provided us is a very clear, framework to take the opportunity in a blockchain and bring some transparency to that, and provide information how transactions are done and education. Look, as a big bank that you've been in business for 240 years, in theory, you could do everything yourself. In practice, why would you? We're not competing with our partners. We're actually thriving on these partnerships, and we bring things to market much quicker. I mean, maybe in a fintech world, a year or so is a long time. In a world of regulated banking, doing something in a year is a short time.
Yes.
And I think the only reason we managed to launch digital asset custody so quickly and so well is because of the partnerships we had. And so thank you, Michael, for working with us.
Yeah, likewise. This has been a great partnership.
The other part I want to just quickly mention, it also provides our teams an opportunity to see the world from different eyes.
Yeah.
Sometimes you work in a large institution, you work in a big bank, you learn things a certain way. And that's an important way. And of course, we're very proud of our risk management framework and our history and the way we build products and the way we work with the regulators and globality. But innovation comes from any corner. And for our teams to be exposed to people that think differently, for people that build products differently, it's very important. I think we also educate, these, fintechs, and I think the fintech is in a way a limited name, but educate these companies, kind of how the regulated banking works, how regulated industry works in general. So it's a two-way exchange. In fact, when some of our people actually go and join these fintechs, I think that's a good thing because they learn this trade. But we also have a talent coming the other way, and I really believe that strengthens the whole ecosystem and that strengthens our brand.
I agree. I mean, you talk about talent. What do you do to hire and hire diverse and recruit here? Because it's like there's still, despite what happened over the last half year or so, there's still a lot of fight for the right talent in this business, especially.
Yeah. There's a huge war for talent.
Yes.
And everyone knows that. At the same time, what fundamentally people want, they want to have a great career, they want to be recognized, they want to learn. And I'm talking about the best people. And they want to make impact. And when you combine this culture of trust, because ultimately that's what our clients expect from us, and innovation. And it's not a very easy combination, but if you really truly combine that, I think you become a very attractive way to place. The people that want to work for a bank, the people who want to work for a large institution, they come because of that, but they also feel we provide them an edge. At the same time that people want to be innovators, want to launch products quick, they get certain security. They get safety. They know it's a large institution. So it's a unique secret sauce, but I do think it works. And I'm amazed kind of great talent we get within the banking industry and kind of from fintechs. The other thing you just want to note on that one, we really embrace diversity. And it's not just a diversity in one way or another, it's really diversity of thought, diversity of experiences, of backgrounds. And I actually think that helps us and helps the people. I mean, the jokes I sometimes make, so you obviously all know, we do custody, we do fund accounting. If you want to be the head of fund accounting today for a large bank, you probably should have been an accountant 20 years ago.
You probably should, yeah.
You started as an accountant 20 years ago. After 7, 8 promotions, if you're great, you could be the head of accounting. Digital assets, we don't have 20 years. You couldn't start 20 years ago, so you could be starting your career now and really become, the leader, a very, senior leader. Some people are here doing this thing. And that embraces in diversity because maybe we have not thought of as an industry of diversity same way 20 years ago. So somebody who is trying to do something now potentially lost the race.
Yes.
In digital assets, the race is just starting.
That's a good point. When I think about, we often talk about traditional finance versus centralized cryptocurrency businesses and other things of that spectrum. And I know Sari, our COO, she will have other traditional financial institutions on stage later today and ask them around like what are the lessons that can be learned from the new fintechs, the new digital assets businesses and so on from traditional finance. But also we want to use the opportunity to ask you that question. So how do you see, what are the things that they should really think about and adopt into their business models and how they're running their business?
Yeah. So I think we fundamentally think that a business is about trust, innovation, and client experience. The reason trust is so important because ultimately people trust us with their money. $45 trillion under custody. As I mentioned, it's twice US GDP.
Yes.
It's also 20% of investable assets in the world. You cannot build this overnight. So my advice to all kind of fintechs in the world, be brave, be innovative as you are, but also understand that ultimately this business is about trust. And in trust, you need to have the whole ecosystem trusting you. Trust is an absolute thing. You cannot be trusted to do something 99% of the time, right? We cannot safeguard your assets in custody 99% of the time. It's absolutely 100. It's not 99. It's not Six Sigma. It's 100. And that's what trust is about. And you build it over a long time. So if you are a fintech, establish this reputation yourself, but also the flip side of your previous question, partner with people.
Yeah.
Partner with people, and I know you've done that really well. Many fintechs are doing that really well. Partner with people that can offer to you what you maybe naturally don't have, because you have something that they don't naturally have. So that's, I would say, one. Second, embrace risk management early. It's not an afterthought. It's something that you really need to build into the whole operating model. It's not a department. When we think about any custody, that's where risk management is completely embedded. Digital asset custody, it's the same framework. Of course, the use cases are different. Yes. If I think about the industry, the custody industry started a couple hundred years ago. People custody gold. People custody physical assets. What did they expect? They wanted to know that your assets are safe, sound, accessible, and you actually have a good client experience. That's still the same. Now, the definition of great client experience is very different. The definition of safety and soundness is very different. But the concepts are the same. And I think that's my advice to any fintech. Embrace that. Embrace working with large institutions. Embrace the regulators. Build in risk management techniques from the get-go.
Yeah, and I also want to dovetail on that. I think it's also important to bring in talent from traditional finance, so that you have some of that background and the DNA there as well, right?
Absolutely.
Yeah.
Same way we bring talent
exactly
from fintechs. Fintech should bring talent from traditional finance, because in really this mind meld, you have completely different formula. You find a way to accelerate your progress. You find a way to build products faster, but you have this embed risk management, embed culture of safety and soundness, embed view that working with the regulators is critical.
Yes. So I was on stage yesterday, and I think one of the slides I had was around we believe all value move to the blockchain. Like, we're a strong believer in that piece, and that's a very grandiose statement about the future and how things are going. So what are you excited about when you look at the future of digital assets and where this will go?
I mean, first of all, I want to emphasize it is a new asset class. Like any new asset class, it goes through shapes. Nobody knows about it, then everyone knows about it, then everyone excited, then we have some questions. It's a complete cycle. People may not believe, but we have this cycle even with private assets.
Of course, yes.
I remember was a fairly junior consultant. I worked for one of the custodians, and they weren't sure they want to provide custody to alternative assets. It was a new, will it stick? Maybe there will be another kind of companies doing this thing. Now we have the largest investment managers in the world, also being the largest alternative managers in the world. So you have to provide integrated offering across all your asset classes. So this will be another one. Some people think it will be another one and a dominant one.
Yeah.
Some people may say it's another one and maybe a smaller one. But in fact, innovation can never be stopped. There are real use cases here, so it will be the asset class, and that's important. The second is the technology itself. I think it's going to unlock completely different level of transparency, different speed, and opportunity for different client experience. When we talk about smart contracts, when we talk about transportability of assets, technology will unlock that, and that together will unlock the new use cases. Lots of people are working on them. We are working on them. Tokenization of real assets is a big one.
Yes.
There are many others, and there are use cases we're not even thinking about it today. But I think the industry over the last 5 years, despite the difficult year, but also a good year in many ways because it really distinguished people that have a real business in this area. I think the industry built itself to a point now it's at scale, to the point that there is a mission, some companies emerging. Other companies may emerge. Think of internet age. I was, again, a consultant, and many of my clients had a head of internet strategy. Now I was like, what is head of internet strategy? Right? So same way, we have a head of digital. That jobs may not exist.
No.
But the concept's going to get embedded. Nobody remembers what Alta Vista was. That was the dominant company in search. So they're gone. The search is not gone. The search is completely present in all aspects of our lives. So that's what I believe for digital assets. So I'm excited about the concept. I'm excited about use cases and technology. And frankly, I'm excited that opportunities it brings to the talent globally, just to go all the way to talent, to diversity. I think we're seeing an emergence of a new generation of leaders that know how to work in traditional industries and yet pushing on innovation in a very different way.
Yeah, and I also think another thing that I usually say is that every company becomes a crypto company, and it's a little bit with a tongue in cheek, but it's basically from the same viewpoint. You say we don't have an internet strategist anymore because every company became an internet company. Everyone is online. That's how it works, and I do think that there are a lot of things there. Do you see that's like, if you think about the world of take the internet and you see what happened with banking during the growth of internet. If I look at it today, it's not that banking changed that much actually. Do you think there'll be a bigger change in what banking is about in the digital age, or will we sit here like 20 years from now and say, well, that was actually kind of the same, it's just like other pieces of value we move around?
I think in some ways, things don't change. And I talk about trust. I talk about client experience. These things not going to change. We may trust machines more than we trust before. When people introduced first ATMs, people were afraid. What if, my cards get stuck? What if I don't get my money? Some people may heard, some ATMs actually gave people extra money just as a sort of enticement. Now, most of the people trust ATM actually more than they trust the teller. Yeah. ATM would not make a mistake. Teller would. Now, people don't even trust ATMs anymore because, why do you need an ATM if you can do it all on your phone? So what changed? We trusted a person. We trusted, the machine, which was a physical machine. We trusted a digital machine now. But the concept is the same. People did not want to put their credit card on the internet. Now it's completely normal.
Yes.
Different client experience, but same expectation of a great client experience. We trust different things, but same expectation of trust. Then for the institution itself, same expectation that risk management needs to be embedded in everything we do. How we do it, what do we look for, what do we check, is different. I mean, what Chainalysis has done for us in digital assets are combine many things that in traditional assets other companies do. So the concept of bringing transparency, of tracing things, is not different at all. Just the way we do that in digital assets obviously is different than the way we do it before. So for all the changes, fundamentals didn't change. Expectations on client experience are different and they're increasing every day. We obviously benchmark ourselves not only within the industry, we benchmark ourselves to the best consumer companies. It's now global. We used to talk about some big centers, Silicon Valley, Boston, New York. Innovation comes from anywhere. There was a small startup in Indonesia can be working on something cool as we're all sitting here. And our job is to find that startup and work with them and embed them in our ecosystem, because they may advance the client experience, they may bring innovation on a framework of trust that we provide.
That's right. And now we sit here today, I said, in 20 years. I look forward to also talk to you next year, hopefully on stage, and definitely in 20 years as well. So I want to say thanks for joining us today.
Right. No, thanks so much and enjoyed it.
Thank you.